Bro, for some reason my stream just turned off. And I I accidentally put it in a, I don't know if this got it, but I accidentally put it in a trade. I was trying to write sell side liquidity, and it made me go short here at this buy side imbalance. So that's what that is. I don't know why my stream stopped. Maybe because I was playing a video. Alright, we're getting some initial volatility, but no first presented fair value gap yet. This failed to create a SIBI. And now we have this though. Like that's a nice draw on liquidity at some point today, in my opinion. Especially that we're in premium prices. Like these two fair value gaps, notice how this like put a high in right at that with these relative equal highs. I didn't really study that beforehand, but it's just something nice to see again here. You have this buy side imbalance here at 8 a.m. 8 a.m. we get a price run. Buy side imbalance, order block. Here, these two consecutive candles with this wick, with this inversion gap, this breaker as well. All those arrays trading up higher into smooth highs and into this city. How many handles is that? 760 to 808, about 50 handles pre-market. All right, let's try to finish this.
Yes. This high and this high are relatively equal. And then you have this one over here. Even though we bumped it a little bit, that right there is still too clean for me. It's too clean. So I want to sit back and watch and see, do they have any interest in trying to press back above that? I think that if they're really going to dump it today, going into the weekend, because there's a whole lot of things going on over the Middle East that everybody's afraid it's going to pop off, and those types of events that are looming, that is always going to be used as a stimuli to upset, engineer, or impact sentiment or how people see trading. If it's risk on, which in my opinion right now it's risk off. Risk off means that there is no one willing to really try to go in and think that we're at a long-term buying opportunity because there's so much uncertainty. That's kind of like what I'm getting at. There's too many things that can go wrong, and that scary type of looming event on the horizon could cause stocks to tumble because the street money thinks that that's what causes the market to drop, and that's not what it is. But the algorithm and the people that have control over it, they will manipulate price so that way the sentiment is shifted based on the assumptions that WAR events would possibly, be a catalyst for why the market crashes or has um, unfavorable price action. Okay, so there's a lot of things that you have to weigh out over time, in your development. But initially, knowing what to look for and then studying these fluctuations around it, and studying how the market behaves around these elements of reference in time and price. What are we talking about? When we say time, obviously, there's specific times that I'm teaching you to look at. But what's the price aspect? At that time, are we referencing an inefficiency or are we referencing liquidity? You see how that's very simple, isn't it? It sounds ambiguous or it sounds lofty and complicated when I just say the market works on time and price. And they think, okay, well, what time? Well, it's the elements that I've taught in mentorship videos and lectures and the things I'm teaching you this week. But when it comes to the price, what's the price? The price is either an inefficiency or it's liquidity. It's something above an old high or below an old low, or relative equal highs or relative equal lows. So they're not hiding from you. They're not hidden in the chart. They're not going to morph into something different. Like when I just toggled from electronic trading to regular trading hours, it looked like a different chart. And then back from regular trading hours to electronic trading hours, the chart looks completely different. It looks like we're looking at a totally different market. Yes or no? Yes. So having the right reference points is like much like having a navigation system in your car. If I write down direction, and say, turn right here, turn right there, go about this, you still might get a little lost. But if you have the navigation system on, where it tells you, oh yeah, there's a rest spot or a gas station in 2 miles. Okay, well that's the same thing we're doing here. These levels are annotated on the chart for you to say, okay, there's a reason or a destination that could be had or met. If it goes up, it can go to those levels. But what you're going to be doing is you're going to be looking to see when there's time for these markets to start gyrating in a specific in a direction. And then the price is providing you an opportunity that you have identified. That's something that you see repeating all the time. I'm forcing this part on you. I want you trading the fair value gaps. That is going to kill two birds with one stone. Number one, it's easy for you to see visually. They don't hide; they're very obvious in the chart. And most of the viewers that are watching your development, they understand, even if they can't pick the right fair value gap because that's what they're concerned about. They'll learn by default which ones that you're gravitating to that has my support in saying that yes, that's the right way of doing it. And they by default will have a baseline understanding. And even if they don't have the fair value gap as their model or entry, they'll at least get a better foundation on how the markets are booking, what time they should start moving, what it should look like. And even if they're studying the fair value gap, most of them, if they're going to be honest, they're going to find that they'll see another PD array that I've taught, and their eye just by default will go to that. And they may use your fair value gap initially as the catalyst, the trust that's going to move. But then they may do something entirely different, trade an order block or trade a breaker or something like that. And then that will be the catalyst for them to actually get in a trade. They won't be getting in when you would be getting in because they're going to wait to see if you fail. And they want to be able to say, I'm glad I didn't do that because he failed. That's his own son. He failed. But they'll take a trade if it moves a little bit beyond that. And then they see the thing that they like to trade and then they'll trade it. But they're going to have more anxiety versus when you get a trade on, you're going to be in open profit. They're going to be in a new entry managing potential short-term drawdown that they have no idea how far it's going to move against them. But they're going to refer to where your stop loss would be and how you would manage that trade. And they're going to have a larger stop loss. And that's going to cause anxiety and scary feelings. And it's going to be a terrible, toxic learning experience because they're not going to follow the rules, which is what I'm pressing on you not to do. Don't break the rules and don't try to reinvent things. If you didn't do it when you were supposed to do it or how you're supposed to do it, do nothing and just watch it and observe it. Okay. So yesterday I talked about how when the market has, or was it yesterday? No, it wasn't yesterday. It was the day before, where there was no news in the morning. Yesterday we had employment data, and then we had a bond auction at 1 o'clock again. But prior to that, I think it was Wednesday, I said there was no medium or low impact news driver for the morning session. And I said, when you have that, the market can gyrate and move around from 8:30, and let's go back to employment data. And then we had a bond auction at 1 o'clock again. But how you're supposed to do it, do nothing and just watch it and observe it. Okay. So yesterday, they're going to be in open profit. They're going to be in a new entry managing potential short-term drawdown that they have no idea how far it's going to move against them. But they're going to refer to where your stop loss would be and how you would manage that trade. And they're going to have a larger stop loss. And that's going to cause anxiety and scary feelings. And it's going to be a terrible, toxic learning experience because they're not going to follow the rules, which is what I'm pressing on you not to do. Don't break the rules and don't try to reinvent things. If you didn't do it when you were supposed to do it or how you're supposed to do it, do nothing and just watch it and observe it. Okay. So yesterday I talked about how when the market has, or was it yesterday? No, it wasn't yesterday. It was the day before, where there was no news in the morning. Yesterday we had employment data, and then we had a bond auction at 1 o'clock again. But prior to that, I think it was Wednesday, I said there was no medium or low impact news driver for the morning session. And I said, when you have that, the market can gyrate and move around from 8:30, and let's go back to 8:30. There's 8:37 right here. I'm sorry, 8:36. The market trades down to new week opening gap low. Okay, and then we rally up, come back down, fair value gap, rallies back to midpoint, consequent encroachment, and then you want to watch and see does it have the ability to trade above it? It does. Comes back down, touches the consequent encroachment, and then trades back up to minimum, new week opening gap high. So it trades to here, and then we fall out of bed. All of this price action right now, as we're seeing, is exactly what I outlined when we have no medium or high impact news drivers in the morning session. The market can be aimless, it can be choppy, it can be not as clear. Now, there can be big, huge runs on these types of days because of external stimuli, something happening, okay? Um, a la the things in the Middle East, okay, or domestically here in the States because of who's running for election and whatnot. All of these factors are weighing heavily for me as an analyst looking at the market saying, okay, I don't want to be holding anything overnight. I don't want to be trading very large. I don't want to be taking more trades than I should. And that's a beautiful perspective to hold learning how to do it. Because if you start that way, then you have a better chance of not having all the bad stuff getting introduced to your perspective and or your actions as a developing trader. Because it's easy to pick up bad habits. Really, really easy to do that. And looking at what the market has done thus far, we have really nice reaction off of the new week opening gap. We've explored price up here prior to the session starting. It's Friday, okay? So what can we do? We can look at the weekly range because we have moved one-sided. We've moved so far one-sided that it's reasonable to see Friday have a retracement back into the range that was formed from Sunday's opening all throughout the week of trading. How much of a retracement can we pull back in? We can trade back into that range 20 to 30%. It doesn't mean that that's trying to predict the closing price. On Friday, I'm not trying to do that. I have stuff that does that, but I'm not trying to do that for the sake of the TGIF scenario. Thank God it's Friday is simply a way for me to kind of like press on the students to think, okay, thank God it's Friday. It's a big week directionally one-sided, and we've had that this week. We've had the market just go straight on up, and we have a lot of movement to the upside, which means that the market is more inclined to trade back in that range to a degree of as much as 30%. There are rules that can see as much as a 40% retracement, but I have not found a way to teach it in a manner that wouldn't be complicated. So as I've mentioned it to private mentorship students, there are things that I have that I can't teach everything. Obviously, I mean it's enough to know that 20 to 30% is an easy ballpark figure, and you can trust sometimes taking shorts on a Friday that could trade as low as 30% of whatever the highest high and the lowest low for the week is. 30% minus the high of the week. That's where you can anticipate the market potentially trading to. And sometimes it's a straight shot. Like it'll jump right there and go real nice. And then once it gets there, then it peters out and goes sideways and then maybe bounce up a little bit, but then it's nothing else for the rest of Friday. The market just dies out. Other times it just meanders around a little while, breaks down, meanders a little while, and then breaks down. And I think that's possibly what we'll see today because there's nothing to speak of on the economic calendar except for it's the end of the week and nobody wants to hold risk over the weekend, and they can do a nice reset by having the market come off of the highs 30%, and it wouldn't unravel anything, even if it's long-term bullish still. It's an election year. These things can be still supportive, even though nobody that wants to be long or is long wants to see 30% of the weekly range give up. Like they don't like to see that profit be reduced or open profit without having taken any from it. All right, so let's take a quick look at ES real quick as a comparison. We haven't done that all week. All right, so give me a second here. All right, so the S&P looks even worse than NASDAQ. Looks really bad. I wouldn't trust anything in here. It still looks a little too clean on the up here. I would disrupt that before we did anything lower. That's my personal view on it. If it dropped, it would be comfortable for me to say it's okay. I don't need to be a part of that move. I wouldn't take anything in ES. Let's look at the Dow. Dow is YMU2024. Same thing here, too clean. It would be reasonable for it to see it spike up into that. I don't trade the Dow. The Dow to me is the dirty 30, and if there's a prostitute in these indices, it's definitely the Dow, and I ain't trying to get an STD. So this is one I don't touch. I look for it to kind of confirm market breadth and continuity in a price run. If there's a divergence between it, I will have it on the radar as a contributing factor for determining whether or not I want to take a partial on the trade. If I start seeing the Dow go against what the NASDAQ and the S&P are doing, I will be cautious, but I won't probably trade with a complete closure of the trade because there's a divergence in the Dow, because it's only 30 stocks that make up the index. But if I do see a divergence between the NASDAQ and I'm long, and the NASDAQ has a higher high and S&P does not have a higher high, the chances are I'm probably going to take a partial off the trade because it's indicating a weakening momentum or in agreement with the and Scout jumping in. Don't even look at it because she'll just keep doing more of it. The any divergence that I see in the Dow, I take it with a grain of salt. But if I see a divergence and there's an inability of the NASDAQ and the S&P to make the same highs, to me, that's a more valid S&P divergence. In other words, it's indicating there's potentially much more weakness that may not be visible to the other traders that are trading it because they're not comparing and contrasting the difference between the three averages. So I think it's reasonable to see the Dow go up and disrupt this smooth area here because what's happened down here? This is all that jaggedness, right? So this down here is smooth. So it's, to me, it just makes sense for them to basically get all this smoothness disrupted. Back to ES. Same thing here. We have these relative equal highs. I would expect them to disrupt that as well. Even though we had a higher high here, we can go back to this one. You know, you can see the conditions are still being there. We have smooth relative equal.
All right. Another lecture finished. I'll probably do those notes maybe later this stream or something else. Lecture 5. Then I'm on to lecture 6. Yeah, 2024 mentorship is definitely a lot. There's a lot of video, a lot of content, and it's definitely a big task. And it's like not needed to be a profitable trader, but it's just nice to hear that theory again and, you know, grow from that. I need to get some water. Okay. So I'm going to study is midnight opening range. We're not really respecting this as a premium array. Did my Wi-Fi go out?
My name is Abby, and I have
Alright, I guess I'm just...
or Pilates. My name is Abby.
Okay. Alright, if my Wi-Fi goes out, it goes out. But here we have a midnight opening range. We're not really respecting it as a premium array. It's coloring outside those lines. And as of right now, this looks like it's a low resistance liquidity run or a high resistance liquidity run. We have buy side here. So alright, cool. It looks like it's still live. And we might have high resistance liquidity run conditions into these 15-minute fair value gaps. Still have like 20 minutes till market opens here.
Well, good morning. Back to the #1 live show. Just saying that. It's things that turtle soup is then counts every and Linda Brad.
I don't think
Range.
there's many screenshots in
Right?
this
I would be because
that I really need to
about-
take in this lecture.
then the people only the lead how to get that. Then I write as a market maker sell my track. What you're at once you cost versus that. And need this and having a our gap it YouTube channel the entire week the directly everybody click it's that that's on the daily chart one day that hopefully will make them stand out, help you entering that first that you're on the and is the difference between this closed and this open greater than 20?
If I just got this, that though.
Handles about the line to do what this not move. Nothing else over here. That this so it keeps everything. We've good day for you to play Asian session tomorrow. Then goes the opposing. Side. It's a and then things away for a second. What is it doing? Go over here to the vertical line for Asia. 7 o'clock. Okay, that place test. I want to see that being visible. Low, it's down. So for the folks who are saying, well, where would you stop? Break like this, and then it rallies. So in this case, it's the close.
There we go. 7 p.m.
So if you look up here now, opening down over wicks, yeah, like to see that's just to go back. It creates it's that is run. So they fire. We would be afraid of with that, but it's not that we took. What am I doing here? Over it. Same way for you when you're doing. Got this. Look, the opening gap. You want to see this, but when it comes to time, 7 o'clock is your time in Asia. The algorithm will come online, and you'll see for this elements down close. As I'll put that right over top. You can see. See the entry. I want to look up, and then we have these are copied it. Even time model to that for your here -1. look at one standard deviation, 0.5 standard deviation. So what I do is I like to find the trade. So always what we were doing. So trading and say, I have everything figured. Out. I'm never going to in your YouTube channel. This is so. It's an important term here. Is because of what I outlined over here. It's initial reference point that the algorithm is going to refer to. When you start looking at support resistance, students that are listening, I don't want my son screwed up with that bullshit thinking because he doesn't understand the retail element of retail support resistance. But for the folks back into that volume low here. We're digging into the new week opening gap that was formed this Sunday that just passed, okay? We trade to the new day opening, previous day high, the initial buy side liquidity. Why am I referencing you? I appreciate it because it's retail week opening gap. O'clock in the morning. No. It's not. Therefore, I'm in back. Drop. Okay. Be honest. Same thing. It's now we're nice days. Now think of old highs on old. Lows. What is it in here? What are you going to do? What happens and you miss this reaction here? What are you going to do? You're going to wait. What are you waiting for? Waiting for a fair value gap or a volume imbalance? There's a volume imbalance. And then we have the open. It trades up, goes right into that. There's your short. And what's it going to aim for? The relative equal lows that we were just looking at before I did this. Over here. So you have an entry here that targets these relative equal lows and these relative equal lows. Looking further to the left, we have this down here. Isn't that a relative equal low?
Yes, sir.
And where's the market go?
Well past it.
Where does it trade down to?
The new week opening gap. Low.
Right. And then what does it do after that? Reaction. See, folks, listen, okay? This is why I laugh at all of these asshats, okay, that sit back and say, I reinvented something. I didn't reinvent shit. I didn't rename shit. If you're inside of the new week opening gap and it's shown the willingness to back off of the consequent approach to midpoint, and then it runs back up to what is this level again?
That is the initial sell side liquidity.
Right. And for the folks that missed what that was or joined the stream late, it was derived from.
All right, almost done here.
Be worried about than taking a lot of trades. Right. I want you to have the ability to sit still.
I think I just need one more screenshot. Just high resistance.
That's
oh no.
Electron. when they're watching 15, drop back down, either take the low that's formed or just recuts. If they're really going to dump it, and then they see the thing that they like to trade, and then the time, well, it's different from relative. It trade next time direction. It's was when the initial for trader for the sake of it gets done that always is long term and it just meanders around a little while, breaks down, meanders a little while, and then breaks down. And I think that's possibly what we'll see today because there's nothing to speak of on the economic calendar except for it's the end of the week and nobody wants to hold risk over the weekend. And have it. All right. So, trying to get an STD. So this is one I don't touch. I look for it to kind of confirm market breadth and continuity in a price run. If there's a divergence between it, I will have it on the radar as a contributing deal. What's this? Have these smooth relative equal highs here. If that was what you're framing on, that's great. But if I'm going to refer back to this one, it's in comparison to that, and it still meets the criteria.
All right, there we go. There's all the screenshots. Okay. You're watching the yes. I'm going over the 2024 mentorship again. Notice how we hit constant encroachment this 15-minute gap. We created a fair value gap off of it. Now we're trading lower. I just don't really care to engage in really pre-market price action. Like yeah, I could stress about these runs here, and I could be like, oh, well, I could have took this fair value gap entry or something like that. But I kind of want to wait for the initial volatility. As of right now, it looks like sell side's in play. We're kind of using the midnight opening range now, but we are mohawking outside of it and not really using it as an array, which I don't love to see. I don't love to see it not really using it that well. It is Thursday before NFP and earnings today as well, and we have new day opening gap and a discount. Notice how we ran above buy side here, and now we're starting to displace lower. This to me looks like we're gonna run into a discount here. Like that looks nice, running above buy side here, wicks, doing the damage, and now it looks like we could possibly trade lower. I don't really see us trading higher. It's not really a need to. I mean, we have this 5-minute CIBI here. That's about it. That we already used. We already hit constantly encroachment of that perfectly. Using that, look at the bodies. Wicks doing the damage. Hold up, I'll be back in a minute. And that's okay. There's going to be times when my model just isn't there. So as of right now, we could get heavy price action. I do want to note new day opening gap here on this chart. I don't have it on this chart specifically. Price started to get a little animated before open. Sell side delivered. Nice. Failing to get to cost of encroachment. Breaking lower. Sibby. Right there. 774. 552. About 22 handles there. So for me, since my target and draw on liquidity already got delivered before session, there's not really like the smoothest draw on liquidity. I kind of have to be a little bit more patient today, especially because I had a great day Tuesday and Wednesday. Wednesday was beautiful. So I want to see us use this as inversion. This gap here is inversion. Discount fair value gap's the next draw on liquidity at 732. Alright, draw liquidity hit. 930 expands. New day opening gap there. Who would have thought? All right, new day opening gap low price two here. Like I was saying earlier, the next midnight opening range is all the way down here, so that could be a possible draw on liquidity if we just stay bearish here. Back into yesterday FOMC range. Loss of volatility here at open. Just a straight dump lower. Let's go to Evan. Alright, we have first presented for value gap here. I'm not looking to this to trade this short because my draw on liquidity has already been taken. We've already expanded quite some. This could possibly be a Judas swing, but I want to see expansion lower. That's what I want to see. I don't want to be looking counter trend to this. And today's a day where I'm just not going to be trading here. I'm not going to be trading this. And that's okay. Alright, if it puts like 3 candles in here and if it trades up into this gap, I just don't really see that as a reversal though. Like, we'd have to really get above constant encroachment of this gap here. And I know a lot of people are probably looking for a reversal, so first presented for value gap probably will be an entry there. There's just not any smooth draw liquidity for me to target personally, so I'm not trading it. Oops. Dude, my nose only be like crazy when I stream. Only. Know how I hit constant encroachment? Nice, beautiful reaction off that level. Constant encroachment. That's what we expect to see in price when we trade into gaps, is constant encroachment. And if it fails to do that, that means it's overly weak or heavy, or overly weak or strong. See if we can trade below this low here. Nice, that low is taken. We have an up close candle now here at new day opening gap low. $687. About 40 handles already delivered from new day opening gap constant encroachment from the low. About 30. So for me, I look for 30 to 40 handles. That's all that I need. Okay. We have yesterday's first presented for value gap here as well. 627. We have a Sibi here. See if we respect that. This could possibly be a trade back up into this gap here. Overall, still bearish framework though, so for me, I don't want to. I'm not taking anything here. We have traded into I believe, a 15-minute fair value gap actually. Well, it's a 5-minute gap. This right here. We barely traded into it, so we still have that portion left. Oops. We didn't close above constant approach to that gap. We respected it there, so we should stay. We should get heavy here. Not like heavy, but at least traded below this low here. Yeah, see, I don't like that for a short bias. There's nothing really here on the 1-minute chart. The expansion already happened. Now we're just getting some consolidation here. If anything, we get like a small leg lower. And usually if we have a Judas swing, the reversal is pretty fast. Usually pretty fast. So I don't see this as a reversal all the way up into premium here. So personally. This is just a nice low resistance liquidity run using the 930 volatility. Smooth sell side. And then we have this smooth new day opening gap blocking the price action. That's a little bit. My bad. First presented for value gap. All right, next draw liquidity for me is this volume imbalance. Made a little fair value gap here. See if we maybe want to trade back up in the first presented fair value gap here. Yeah, this big 15-second fair value gap, SIBI. Now we're kind of trading above that, so then trade lower. 15-second BISI right here. Sell side here. Okay, that 1 minute SIBI, 1 minute, yeah. Oh no, that's that 15-second fair value gap. All right, short-term high taken here. Okay, now let's see if we want to take this short-term high. Minor buy side. One minute Sibi acted as inversion. You have a 1 minute buy side balance there. That's also the 15-second Missy right there. Trade up into first presented fair value gap. 41. We'll say like 53 as entry to 88. Like a 35 handle price one right there. There it goes. All right, that would have been my target in that trade. Or maybe looking for this. Could be Terminus, this Sibi. But yes, just tape reading this morning. I think I won't even take a trade today. Maybe I'll play something in earnings, but that could be a little slippery slope. I mean, if there's a setup there, yeah, I might take it. But I really just want to study for the rest of the week. That's what I just really want to focus on doing less as a trader. Just doing less. Because I've tried to do so much I've tried to do so much, and it's caused me to slip up. Like, trading should be easy. And I have had the mindset where I'm just gonna grind. I'm gonna do as much as I can. You know, I'm gonna learn as much as I can. When trading is not like that at all. It's just accepting risk and doing less and letting the market do the rest. You know. And that has taken me a while to figure out. That has taken me a while to figure out and learn. Because, like, even though I didn't place a trade, I saw that we were stopping here, going higher. This is what I do need to get better at, is, like, to be in a trade like this would be amazing. Where it's just, ooh, 9:30, just huge candles, and 9:31 too. Like, that is a, like, 5-minute day right there. That's how we're using constant encroachment of the new day opening gap. It's a little bit different on NQ. Like here on MNQ, we hit the high right there, and now we're using constant encroachment of that gap. On NQ, it's a little different. Slightly. Alright, I'll see if we get into that Sibi. I gotta hope my stream's still up. The new day up opening up low in. I didn't get the opening range gap today. Ooh, ooh. I know that 5 minute busy too. Hitting that low perfectly. Oh. Yeah, there's trading's hard as well because there's so many components to how the market moves. There's like if you aren't like organized for a day or two,